Hi, and welcome to Market Conversations. Today is Sunday, April 23rd. Just want to do a quick video on Bed Bath & Beyond. The stock was down on Friday 2%, and if we take a look at this 9-month daily chart, it actually had a small rally all the way up to 0.56 and then came back down. We have some news today. Bed Bath & Beyond is going to file for bankruptcy, Chapter 11. I am on their website, and it says, "Thank you to all of our loyal customers. We have made the difficult decisions to begin winding down our operations. Bed Bath & Beyond and BBBY stores remain open to serve you." So if we take a quick look at their investor relations page, go ahead and take a look. As to facilitate this process, the company has received a commitment of approximately $240 million in debtors in possession financing from Sixth Street. Following court approval, the company expects its financing to provide the necessary liquidity to support operations during the Chapter 11 process. Presidents and CEO said millions of customers have trusted us through the most important milestones in their lives, from going to college to getting married, settling into a new home to having a baby. Our teams have worked with incredible purpose to support and strengthen our beloved banners, Bed Bath & Beyond and BBBY. We deeply appreciate our associates, customers, partners, and the commitments we serve, and we remain steadfastly determined to serve them throughout this process. We will continue working diligently to maximize value for the benefits of all stakeholders. For decades, Bed Bath & Beyond set its standard across the home goods sector and held its position through many different economic cycles and alongside a continuously evolving customer. In late 2022, the company initiated a significant turnaround plan to reset foundational elements of its operation and financial positioning to better serve customers, employees, and supplier partners. Have been underway to improve merchandise assortment, streamline supply chain, and optimize its store footprints. So if we take a look on Reddit, there's almost 63,000 members, and we can see this post here. It says Chapter 11 is not what most people think it means, or at least a very vocal minority. What is Chapter 11, or what can it be? A Chapter 11 bankruptcy will result in one of three outcomes for the debtor: reorganization, conversion to Chapter 7 bankruptcy, or dismissal. In order for a Chapter 11 debtor to reorganize, the debtor must file a plan of reorganization. In effect, the plan is a compromise between the major stakeholders in the case, including the debtor and its creditors. Most Chapter 11 cases aim to come from a plan, but that may not always be possible. So essentially, if BBBY were to cease operations and liquidate, they could just file the Chapter 7. So why file Chapter 11 if you don't need the potential paths of a Chapter 11? Wouldn't it be much simpler and more logical? Yes, it would. So let's read that again. Reorganization, huh? That's right. They have to provide a reorganization plan that has to be approved and be in good faith. Chapter 11 does not have to mean liquidation and cease of operation. Okay, and if we take a look here, it says, remember the huge volume we had a week ago on bonds. And now read this. Throughout the duration of the reorganization, bondholders will stop receiving coupon payments or principal repayments. Furthermore, the company's bonds will also be downgraded to grade bonds, otherwise known as junk bonds. Since most investors are wary of buying junk bonds, investors that want to sell their bonds will need to do so at a substantial discounts. Junk bonds, huh? So why would BBBY buy back their own bonds if they knew they go into liquidation? Why buy something that can turn into shit if you know it will? That wouldn't even make sense if it was a decision malicious towards the shareholders or bondholders. Acquisitions as a means of restructuring firms and Chapter 11. So this user provided an example of Hertz. May 2020, Hertz filed for Chapter 11 as well. Stock drops about 80% immediately. Doesn't look good, I know. Keep looking. Little volatile movement during Chapter 11, and then October 30th, Hertz stock is suspended and delisted. That doesn't mean it disappeared from people's holdings. Present shareholders kept the shares, but trading wasn't possible, and people that didn't already own couldn't buy in. And then Chapter 11 proceedings went well, in fact so well that relisted June 30th 2021 at around $26, or around 1400% the price of the listing. That's right, this is how things can go. Chapter 11 is not liquidation, panic, and bankruptcy just because MSM told you so. So we can see throughout this forum here, we can see a lot of people posting about what could possibly happen in the next few weeks. few months regarding this Chapter 11 filing. So all we can really do is just be as patient as possible. I probably wouldn't invest more than what you can afford to lose because we don't know what's going to happen. This can be a turnaround story, but until then, just be very cautious. I'm currently down over $7,000, and that is because of me buying call options. I bought call options when the stock was actually around $3, never thinking that it would go below $3, but it did, and here we are. They're filing Chapter 11. There's not much we can do, but just think about what we're investing the next time around. And that's pretty much it. Let me know in the comments below if you're planning to buy more BBBY or what your plans are for the stock.